cap name, Dalmia and JK Cement from the mid-cap space. For to finish, let's get the...
I think we've got the... I think markets are trading, right?
To finish is what it is. The GIFT Nifty actually indicated a flattish start, but the market's anything but that. It's a 40-point uptick that we're seeing on the Nifty. The mid-caps continue to do well. The Nifty Bank is actually underperforming a bit, but too early to call it an underperformance, so to say. Broader markets, no problems. 5 stocks advancing for 1 stock which is declining. So let's look at some of the stocks which are in focus. HCL Tech, of course, is the big gainer, the top gainer on the Nifty. And that's largely on account of that near $300 million deal that has come in with Olympus. Apart from that, we are seeing some traction in oil marketing companies as well. BPCL is doing well, up around 2%. Tech Mahindra, Coal India are the other gainers on the way up. On the way down, though, we are seeing some bit of decline in Asian Paints, Titan, a couple of these consumer discretionary names seeing a wee bit of profit booking. ICICI Bank is the other one, which is mildly in the red. Nothing really to worry about, so to say. Oracle, however, is up around 4%, though it has nothing to do with the Oracle that was up in after-hours trade in yesterday's trading session overnight in the US. Biocon also seeing some bit of profit, taking down about 1.5%. BHEL is the other one, which is down about 1% as well. Broader markets, of course, Nigel, doing a lot better.
Well, that's right, Mangalam. A few stocks that are bobbing around. You have some of these mid-cap tech names that are doing better. You have, Birlasoft that's higher in trade. Persistent Systems as well was up close to 2%, and Emphasis as well was higher in today's trading session. Both seeing some profit taking. Biocon has come in for some profit taking. BHEL as well has come in for some profit taking. The headline index, mind you, is now up close to around 70 points as we speak. So good move is what we're seeing, at least on the headline index. But from the broader markets, well, Heritage Food is down close to around 4.5%, Mangalam. Jaycorp started off in the green. That as well has moved into the red. TVS Supply Chain, as Mangalam told us earlier today, that agreement that they have signed, it helps them in terms of the volume growth that they have been talking about. So good move out there. IRB as well popped up 2.5%. In SCI Land, that's one of the top volume gainers actually, up close to around 6%. Even SCI is up close to around 5.5%. Prashant.
Well, it's coming up as a very large sort of volume mover. 50 points, by the way, on the Nifty is what we have. 23,300 plus. The Nifty Bank will come up for you on your screens. That is also up about, but it's flat. I mean, 38, 40 odd points and a 50,000 index. That constitutes flat. Mid-cap index will come up. That is up 0.5%. And the small cap index is 0.5% higher. I mean, mid caps and small caps far outperformed what the Nifty did yesterday. So that continues today as well. So a few other names, right? And I think at the risk of some repetition, but HCC is up. It'll come up big mover yesterday, 3%. It's the top volume-led gainer today. Oracle Financial Services, I think we mentioned that, 5.5% higher. Reliance Power is coming up with a 5% pop. Very large volume, so that's the reason why we are mentioning it. JP Associates is the 4th biggest volume-led gainer on the NSE. Go Digit Insurance, Yash highlighted the numbers, 5% first after it came to the market. So 352 is where Go Digit is at. You've got what else? Paradeep Phosphates, which I think is starting higher, sharply higher right now, 4%. There is a stock called Kriti Industries, again, large volumes, and its limit up 20%. I don't think it's ever come up here on the screen. 164. Schneider is up about 5%. 862 right now. There is Dollar Industries, which is up about 5%. I mean, I can go down the list, but volumes then kind of sort of start to taper off very, very fast. Yesterday, I think was the first time names like these Heritage Foods and KCP are all pulled back after the frenetic rally that we had. KCP, etc., were down about 5, 6, 7%. Heritage is down about 5%, and it's down. And KCP perhaps we could pull up as well. Otherwise, I can't spot any large volume-led loser at all across the board. So that's the picture.
Many. And just a word on Dollar Industries. You said that is one of the gainers today. They've appointed the services of Mahesh Babu as a brand ambassador to increase their business in the south, and they're aiming for 50% sales growth coming by in the southern part of the country itself. And that explains the sort of up move that we're seeing here. Dollar Industries, mostly an east-north sort of facing company, now increasing their presence in the south. And we have some traction in a lot of these PSUs. Nigel, you pointed out SCI Land and Assets. Look at Dredging Corp. That's the other one which is up 10%, and a fair amount of volumes there as well. So locked in that 10% circuit. bunch of these stocks actually doing well.
Well, that's right, Manglam. And just one more stock, Sun TV. You know, the stock has gone to its highest levels I think we've seen in the last 5 or 6 years. We've been highlighting this actually, that valuation-wise things look good. You know, 30,000 crores of market cap. They have around 5,000 crores approximately of cash in their books. They have that IPL franchise as well, doing an EBIT of 2,500 crores. So valuations are always supportive. I recall, you know, 2018, the stock went to more than 1,000 rupees. And from there, it more than halved. But now in the last few days, you know, the stock has seen a good move. Yesterday as well, it was one of the outperformers. And in today's trade as well, it's up. For this month, the stock is up close to around 18%. One of the top volume movers today.
I think I saw a broker, I think it was Axis Capital, I think it was yesterday, highlighting valuations are also
very yummy.
Completely out of whack. I mean, and there are not that many plays, right, in that space. There's Sun TV.
The problem, I think, is that political risk, right?
Yeah.
Which
has turned out to be a...
Absolutely.
Which is currently a favor. You know, the big trigger for them, however, irrespective of the valuation and all of that, is are they going to unlock value at any point in the Sunrisers? And the way they performed this time in the IPL, of course, they would extract a little more value. But that's exactly what
just two things, Manglam. One is use the cash in your books. What are you sitting on so much of cash? Second is unlock some value. But I think we've spoken enough about it. Let's get to our next guest.
There's one more, sorry, there's one thing which is a long, I remember, I don't know, so the promoter takes, I think, it's a large chunk as a fixed, as a percentage of profits or something, if I remember it correctly. So I remember there used to be a lot of angst back in the day that should be corrected. But we'll get the latest on this one. But as Nigel said, enough about Sun TV. Let's move on. 773 on the price there. Markets holding with a 50-point pop. Dheeraj Agarwal of Ambit Investment Managers is with us. Dheeraj, good morning. Good to have you with us here. Thank you for your time. We've been getting a lot of commentary and views and opinion about what happens next, because it's all about policy. There is, the continuity as far as top cabinet berths are concerned and who's running each of these ministries. And now, will there be continuity in policy, or will we see newer things? Housing is one that we highlighted. Our colleague from Delhi, Sapna, highlighted what is likely to happen there. So it's a big push on housing. What else, Dheeraj, are you guys sort of working on? And because it's all about finding ideas, and a lot of it has got to do with where the government will push. What's your sense?
So I think by and large, the policy continuity will be there. And the message which the government has given by maintaining a stable cabinet as compared to the last time for all the key portfolios is very, very clear that by and large, this whole thrust on growth through capital expenditure and infrastructure development is going to continue. And there could be some tweaks on rural programs or consumption boost, etc., which many actually felt even in the last budget that it was conspicuous by missing. And that's the segment of the economy which is seeing a little bit of a stress. So that's possible it can come back. I don't think it will be large. I don't think it will be of the scale that one would actually say that the policy direction has been turned on its head. But there could be a little bit, I would say a little bit of needle swing in that direction, if at all.
All right. So if there is a little bit of a needle swing in that direction, would you now start to look at consumer staples, two-wheelers? I remember you weren't a big fan of two-wheelers about a month ago.
Not really. I mean, I was a fan of two-wheelers a few months ago, and a month ago I said valuations look a little fairly priced kind of a thing right now. But I think rural-based companies should be focused on at this point of time. So I don't think one can yet make a conclusive call that they have turned. One cannot make a conclusive call across the board, but selectively, yes, rural-based. In any case, cyclically, the rural demand has been down for quite some time. So even cyclically, there's time for a rebound. The stocks, many of the rural-based stocks have not done that well, with the exception of course, tractor companies, which are at record highs at this point of time. And yes, one should focus on that.
And rural would be what, according to you? Would it be consumer staples? You've spoken about two-wheelers and tractors. How else do you play that theme?
There could be staples. There could be lower ticket discretionary products. So in fact, there is a point of view that even if the rural incomes does revive, even if there is more money in the hands of the rural, the benefit could be more for discretionary rather than staples. But that needs to be analyzed. So I think there are a lot of moving parts in the market at this point of time. And my preference right now is to take cognizance of moving parts, both domestic and global, and question the few strong trends which have been in force for the last 1 year or 2 years, and try and assess whether some of these can actually reverse or stall, at least temporarily.
Hi, Dheeraj. Good to have you on the show. What's new then? What else do you like? I mean, the market is hungry for ideas. In the near term, the headline index could consolidate, one would think. Maybe we go a couple of percentage points up from here. But in terms of other themes, what are you looking at? I recall Zomato, and we've spoken about it in almost every interview. So let's keep that one aside for now. But give us a new idea, that our viewers can work with from here on.
I think the largest focus at this point of time is on banks, because banks have been conspicuous by their underperformance for quite some time, and valuations have come down, numbers are looking okay. So that's one area which is very conspicuous by its underperformance, despite good numbers coming through, right? So another large sector which has been underperforming is IT services, but then you can see the reason for that. IT services revenue profile has been weakening over the last 12 or 18 months. And the hope of a turnaround in IT services, which most of the analysts were pegging at first quarter FY25, looks like it's pushed out. So I would say a huge focus on these two sectors are required. IT services primarily because I think US economy just continues to surprise positively. So I just sometimes wonder for how long will the US companies resist from restarting the spending and reinvesting in technology. So there is no sign of inflection yet in IT services, but I think this is one space where we need to watch very closely. When the slightest sign of inflection, and the stocks are sitting on some good cuts and good underperformance in the last 1 year or so.
All right, that's the banks. So you're referring to the private sector banks because they have actually underperformed the largest banks. So what do you do with the PSU banks? Two schools of thought. One would say that an SBI still has room to grow if they're going to be growing by that 15% odd with ROEs of mid-teens. Then they don't need to come to the market to raise fresh capital, and also they have that stake in Yes Bank. While the other school of thought is saying bulk of the good news is in the price at around this 850 rupees. Your view on PSU banks?
I like SBI. I don't know about. There are a large number of PSU banks. I don't have views on all of them. But I think the couple of leaders still look good from a longer term point of view. From a shorter term point of view, as you rightly said, there could be a little bit of a rotation into private from PSU. That's highly possible. So I think the event of the last few months, not just election events, the events of the last few months, which is a weakening rural economy, signs of confusion out of the US, expectations of rate cuts now being firmly postponed till the end of the year. But the flip side of that is, which obviously means that the US economy is a lot more stable than what people believed it to be. A bit of rebound in China, a bit of an inflection point in China. A lot of these things can cause some mini cycle rotation in our market as well. So, the curve can rotate within the sectors. No conclusive signs of that yet, but I think it will fall into place within the next 2 to 6 weeks.
Right, 2 to 6 weeks. Dheeraj, you did speak about the IT services sector looking a little better because at some point the cycle will turn. That's one school of thought. The other one is that the cycle may have, moved structurally towards low-cost products, newer technologies, artificial intelligence, and that may structurally reduce margins for all the IT services companies. So, is that a risk? And that's also a benefit to a lot of the other players. So how do you play that then?
I think you will still require IT services of the kinds that we do. So, this is not the first time questions have been asked about the structural reasons for IT services to exist or go into a structural decline. So remember when there was cloud, similar questions was asked that with the cloud services coming in, do you actually need the traditional IT services? Before that, it was digital, and then now it's coming down to AI. AI can do a lot of stuff, and most Indian IT companies will adapt to actually use AI and benefit from AI rather than get completely wiped off because of AI, right? So at this point of time, we may, it may sound a lot more intelligent to attribute the decline in IT services business to AI. But the fact remains that if we just actually look at the IT spending of most of the US companies, it's been on they've been a little bit on a cost saving spree. And US is a very hardcore capitalist economy. Even if the analysts forecast that there will be a slowdown, the companies just scale back. So slowdown has not happened. The economy is doing well, but the fears of slowdown, recession, soft landing, hard landing, it just continues. And the companies have scaled back their budgets a little bit. When they come back, IT services will come back. I mean, yeah,
All right.
if you're talking about will IT services go back to 25-30% growth curve, I doubt it. But can they improve from here? Of course they can.
All right. Thanks a lot, Dheeraj, for joining in and weighing in with your thoughts on a multitude of sectors. Wish you good luck, and we will obviously keep coming to you for newer ideas as they come as well. But with that, let's talk about another company, focus on Manappuram Finance, a very, very special conversation. Why is that? Because it was the year 1949 when Mr. V.C. Padmanabhan established the company in the coastal village of Valapad, where people mostly depended on fishing for a livelihood. This firm obviously carried out money lending and pawnbroking on a modest scale. Mr. Padmanabhan actually, also ran his business on a capital base of 5 lakh rupees. And from then, 75 years later, his son, Mr. V.P. Nandakumar, who is the MD and CEO of the company, joins in on this momentous occasion. It's been a big, long journey. You obviously, lifted those capital curves, took it to about over 1 crore, etc. And now at the cusp of where you are, everyone's looking for more value being generated, partly from the housing finance business as well. What's the latest on Asirvad?
So we have filed, it is in the DR3 stage. So we have some limitations, or within the limitations, yes, the date of, we got the SEBI approval, and when to launch the issue all depends on the market conditions. Our bankers are looking forward for the appropriate time to launch. It is yet to be decided when to launch the issue.
Had filed the papers, and that time you were looking to raise around 1,500 crores. So just trying to figure out how much will you raise, and what is the timeline? Can we expect it to come in the next couple of months?
That is what we expect. That because now the elections are over, the new government has come, and everyone believes that there will be policy stability. So we are also looking forward for that stability.
Okay.
And we expect that to launch in another 2-3 months' time.
Okay. All right. Mr. Nandakumar, we'll just come back to you, sir, but we have visuals of the Finance Minister, Ms. Nirmala Sitharaman, entering the Finance Ministry, the North Block, taking charge, greeting officials, and I think we'll have visuals from inside there as well. So there's the wave to the sort of crowd gathered there, media persons, etc. And we do hope there will perhaps at some point there will be a sort of soundbite after she takes charge for the record third time. I mean, so this is quite incredible as far as the Finance Ministry is concerned. So Nirmala Sitharaman taking charge as the Finance Minister in the NDA-3 government. But we have the Manappuram management with us, so let's continue the conversation.
Yep.
All right, Mr. Nandakumar, good morning. Nigel on this side. And first of all, congratulations on the anniversary. I'm looking at the valuations, and the street believes that valuation-wise, at least you have support from here on. You have another competitor in the market which is trading at far higher valuations. So that aside, let's get some numbers going now. On the gold finance business, what is the growth that you're guiding for in this year? If you could give us that number. You could break it up in terms of tonnage growth as well. And a quick comment, one of the large players in the gold finance segment is out of the market, and that happened in March. Are you seeing some incremental market gains for your company?
So this year, the gold loan growth is seen good because the post-COVID, our target audience, they were in difficulty. So their demand for credit has gone up. So our ticket size means our average ticket size is around 75,000, and average life of the loan is for 3 months. So the customers are mostly from the middle class and lower middle class. Their requirement for money is the catalyst for our growth, key driver for our growth. And we hope they have started coming. So we expect around 12 to 15% growth during the current year. That is the trend also now.
And any incremental gains because one of the large players are out of the market?
So yeah, that is distributed to all the players. There are many players here, banks, non-banks, cooperatives, etc., etc. That is some marginal gains are there. Other than that, we don't see much about that.
Mr. Nandakumar, we'll just come back to you. Those are visuals coming in. I spotted Mr. Somanathan there. He's there, right there, in the background. The finance secretary. I think I saw the revenue secretary there as well, and the CEA I think was there in the picture as well. So yeah, so those are visuals coming in from the North Block Finance Minister's office, where she will take charge for in the NDA3 government as a finance minister. There is continuity, and it's one of the topmost jobs at the as far as the cabinet is concerned.
Be the most important person to track for the next month, at least until the budget happens.
Behind Mr. Somanathan, who's also very, very closely sort of watched. Next to him, of course, is the revenue secretary, along with other top officials coming through. So, the top secretaries of the finance ministry, along with the finance minister, the customary formality of taking charge with that signature, and then hopefully after that we will have the a soundbite as well with her telling us what's top of mind. The budget, of course, is just around the corner, remember, and it's all going to be about, at least from a market perspective, expectations, what will find favor, what will be the focus, etc., etc., etc. So an indication, we'll see. So that is those are the visuals coming in right there with the finance minister taking charge. So we'll have the visuals up, and we will continue the conversation here. We'll stay on that for a bit longer. I think, okay, we'll come back to it when we have the soundbite. I think Mr. Nandakumar is back with, is of course holding on, he's waiting. Mr. Nandakumar, good morning, sir. Prashant this side. Congratulations. 75 years, it's momentous, it's a long journey. It's, one of the oldest companies in the space from Kerala. Now, just a quick point. I don't think we've spoken to you, sir. And on that point about one competitor out of the market, that we don't know yet, but we do know that the RBI appointed audit is done, is finished. So we don't know when that will come back. But you're saying that it's an industry-wide impact. So whatever happens, it's not as if you specifically will be impacted one way or the other. I mean, it helped the industry, of course, with lesser competition. And as and when that competitor comes back, we'll see what happens overall. But on that 20,000 rupee cash dispersal rule, which the RBI emphasized in the month of May, I think, middle of May, Mr. Nandakumar, could you tell us, is there an impact? Because from what I understand, this was because, of course, gold finance is such an old business and it was run in its own fashion. And there have been very, very, very little delinquencies. But now, of course, the RBI is insisting that everybody follow this norm. Not just some of the newer players, but also old veterans like you. Do you see an impact on growth rates, and what have you already seen? Go on, sir.
The impact is positive only. This direction came on 7th of May, and from 8th morning we have introduced that fully across the branches. One good thing for us was 63% of all the loans were in the online gold loan mode, which was through the bank account only. And the balance, some 23% were small loans below 20,000. So the difference is not very big. So as we have a seamless process, etc., already established here, We are the pioneers in that. So the impact was only positive, and we hope will be benefited because of this introduction of these
So around
changes.
15%, 15% of your loans were fell in that category, over 20,000 in cash.
Right. So,
But how would it be positive, sir, at the margin? Could you explain?
see,
This measure?
We cannot disburse anything more than from 20,000 and above. We have to disburse only into the bank account.
Correct.
So we have started this online gold loan dispersing into the bank account and operating through the bank account around 5 years back, and that was working seamlessly. It is very comfortable for the customer. They can avail the loan. Only then they need to come to the branch and deposit it. Then thereafter they can transact online 24 hours, 365 days. So they were using that, and more people are attracted. Now, as these are working seamlessly, we didn't find any difficulty in the transition to the new regulation, new guidance, and we have done that on the very next day of the instruction from the RBI.
Right. Let's talk about the other parts of your portfolio then. As the graphic tells us, the parts that are growing very fast for you, CV as well as home loans. CV, the industry is expected to not grow fast. In fact, some are expecting it to decline as well. In light of that, what's the sort of growth that you foresee for your CV portfolio and your home lending portfolio?
So these businesses were our horizontal expansion. So these were these diversification was based on the demand from our customers. We have a trusted customer base, of which 80% of these customers are repeat customers. Customer loyalty in gold loan is very high, and they were asking these about from this 10 million customers. They were asking for some home loan. These are all affordable housing. Our average ticket size is below 10 lakhs. So similarly, for MSME loans, these MSME customers, gold loans are of shorter tenure. They wanted to have a longer tenure. They were ready to offer their shop building or their residential property as mortgage. That's why we have entered into this. So coming to the vehicle finance, around more than 50% of the customers are acquired from our own customer base, unlike other vehicle financiers. So our customer acquisition is low, and we have expanded this business only into around 20%
Mr. Nandakumar?
of our yeah.
Yes. Mr. Nandakumar, if you could give us one number. You have been helpful and given us that target for gold loan growth. For this year, the growth you're saying is around 12% approximately. For the non-gold portfolio, how much will it grow? Give us,
These are all small portfolios. Last year, these businesses have grown over 50%. And it is our expectation that the same momentum will continue.
So non-gold will grow by how much? 30%?
Last year it was around 50%, because the portfolio itself is not very large. Both vehicle and MSME portfolio, both put together was around 5,000 crores. Now we expect around 50% growth.
Okay, got it. And what about your NIM, sir? In the last quarter, the cost of funds went up, that's why 40 basis points got shaved off from your NIMs. But you have mentioned from year on, you're expecting cost of funds to stabilize and you're expecting your NIMs to improve. So give us a broad target, sir, for the coming year.
So as a part of diversification of our liability, we raised some overseas bonds where the cost of hedging was high. So the overall cost was high. That led to the increase in the overall borrowing cost. That is a major reason. So as we are getting a better growth compared to last year, we are confident about maintaining our targeted ROE 20% during this year. A slight decline in net interest margin is not a concern for us to achieve our target of
For NIMs that you have an
20%.
ROE target, sir, for 20%. You've said that you'll maintain your ROE at 20%. What would the NIMs be? Would we see them improve from last quarter levels?
No, NIMs may slightly decline. Even then, we don't. It is not a concern for us because we are getting a better leverage during this year. So that it will be compensated with that, so that ROE of 20%, we are confident of achieving that figure.
All right. And we'll leave you with the question that we asked you first. Asirvad, the MFI IPO, you said it will be about 2 to 3 months from now. You've given us a timeline. You haven't given us the amount. You had an enabling provision of close around 1,500 crores that you would raise. You would go with the entire size?
Yeah, that is what we want to do. But all depends on the market conditions. We will take our bankers' advice. So accordingly, we will decide on that.
Okay. Very quickly, sir, we have to ask you this. A couple of brokerages, they mentioned that Manappuram is a potential acquisition candidate. A quick comment on that?
So, this market speculation was always there. I used to hear for so many years. But I don't think it will happen. It's only mere speculation.
So it's just speculation. You're not an acquisition candidate. Well, we appreciate you joining in, sir. Congratulations yet again on the anniversary, 75th anniversary. Hoping the next 75 are even better for the company and clearing the air with regard to you're not an acquisition candidate. Wishing you a good quarter and good financial year ahead. For the time being, well, we'll slip into a short break. Up next, we'll be joined by Ankur Rudra of JP Morgan, who will put the spotlight on the IT sector. Stay with us. Welcome back. Well, the markets are firing all cylinders as we speak. The Nifty has put on another century. We're up close to around 100 points odd. But the breadth of the market, that's something that's looking very, very good. Advanced decline ratio comes up for you. 5 stocks advancing for just 1 stock that's declining. Well, let's shift focus to the IT space then. JP Morgan says channel checks suggest no signs of spring in the Indian IT sector, and they prefer defensives with high growth names. Ankur Rudra of JP Morgan joins us on the show. Hi, Ankur. Good morning and always good to see you in. Well, tell us first up, how do you approach the tech space and what do you like and dislike?
Hey, thank you. Good morning and thank you for having me. So we think the IT services sector continues to see, demand uncertainty. This is the uncertainty that sort of percolated and persisted for over, 6 to 9 months now. And there is no clear sign of demand recovery momentum here. I think what we are hearing and seeing is that the underlying demand trends remain relatively unchanged and subdued. Companies continue to see larger contracts, which are very cost-saving oriented, but also to an extent driven by vendor consolidation, drive the action in the market, whereas shorter cycle deals continue to sort of miss in action. We are also sort of seeing the industries which were previously healthier, like the auto, aerospace, travel, etc., continue to do well, whereas sectors such as TMT continue to be under pressure. The one change we do see, however, is financial services looking a bit more healthier than before. So I think that might change over calendar 24. The other thing we also see, to an extent, a pressure point on the industry tends to be insourcing, and that sort of is driving the pressure on the sector. So in this context, what we like is we have taken a barbell approach to the sector. What we basically are telling investors is either go for defensive companies with which are higher quality, give you a huge amount of dividend or buyback support, or go for companies which will give you relative amount of outperformance over fiscal 25. So those are the two sort of ends of the spectrum we like.
Could you get a little more specific on what those two ends of the spectrum would mean in terms of a couple of names?
So we are not allowed to name, as you know, but as what you can see among these stronger growth companies, we are seeing some of the mid-cap companies are growing a lot faster. The larger cap companies continue to struggle on an overall growth perspective. So you've seen the Nasdaq number last year. The industry growth was sort of low single digits. So we don't think at the moment we will see any meaningful acceleration from that. So the companies which have that kind of a growth profile, but also give you dividend support, are the ones we like on one end, and the companies which can outperform the sector growth. And some of the names probably are similar to last year, which is what the other end of the spectrum we also like.
Now, the reason why I ask you is largely because, this morning there was a deal that came in for HCL Tech. Wipro's looking at some sort of AI foray as well. Over the last 12 months or so, Infosys and TCS are up around 16 to 19 odd %. So when you say stick to quality names, so one end of spectrum, I presume, would imply some of these names. And the second end, which is basically high growth, which according to you is outperforming here?
So like I said, among the larger companies, among the large cap companies, we haven't seen meaningful differentiation of growth for a while. Many of the names you mentioned were sort of growing in the region of the NASSCOM growth rates. And we really don't see a meaningful change either within the names or within the large cap sector pack. So only companies where the dividend yield is reasonable, let's call it, close to mid-single digit dividend and buyback yield is reasonable. That's one end we think is where investors might be protected on the downside. And on the other side, with companies which are growing, let's call it, double digits and above, which is about 10 percentage points ahead of the large cap peers. Or let's say on a 2 to 3 year basis, earnings growth can be either 10% or revenue growth can be 10% ahead. I think those are the two ends of the spectrum we like. I'm sorry, I can't get more specific.
Yeah, no, fair enough. Ankur, now Prashant here, morning. Because we are in a situation where participants and investors that we speak with are generally of the view that index level valuations are not crazy, but some of the hot areas valuations are very high, so it's kind of tough to find new ideas. There is no real sign of a recovery in IT services. We got that point. But do you think if one were to kind of hold on, buy some of these IT names, and we have the reports, we'll put out the picks, you can't talk about it, understood. But if one were to hold these on for a few years, right, extend the holding period, isn't that make sense? There is a margin of safety here in some of these names, IT services. And given enough time, one will make money, decent money?
Yeah, I think what you've seen is if you look at the IT sector, right? So IT sector is sort of, underperformed so far this year. It's about IT index is about 8% below the Nifty. It's broadly in line over the last 1 year. It's underperformed on a 2 year or a 3 year basis. So then you have to go back all the way back to 5 years to see IT, or 4 to 5 years to see IT sector outperforming, which is basically during the beginnings of COVID. Now, what we are seeing in demand in the sector is, and why growth is not really coming through, is enterprises had significantly overinvested right after COVID, and that's still being digested right now. We are in the second year of, call it, technology spending recession, if you will. And typically this phase does not last for a long time. We don't think enterprises will be able to not spend on technology beyond a few years' time. Now, there are a few potential clearing events from a tech spend perspective, which can potentially drive performance in the sector. One of the events we continue to hear from our industry conversations is potentially, after US elections. The US presidential elections have been a source of uncertainty, which is adding to a potential softness, a continued softness this year. Also, the lack of rate hikes so far that was expected most of this year, a lot of enterprises are using that as an excuse to not spend. So if any of these two clearing events, or if not both, play out over the next 12 months or so, I think that can really help the sector. There's also a lot of conversation about generative AI, how that impacts spending priorities and if IT services spending is getting reprioritized as a result of that. So if any of those debates are settled, we'll tend to see performance. So, and hence I think there definitely is an element of, I would say, defensiveness in IT companies, especially if you look at multiples now versus pre-COVID, they're slightly different, but mainly supported by dividend yield. And hence, some of the high-quality dividend yield supported names look, I would say, defensive and look where the margin of safety is not very low, I would say.
So that's a yes. To my question, Ankur, that's a yes. You will make money if you buy and hold and wait because it will turn. That's what I made out from your answer.
Yeah, what I would say is, in the short term, we are, I would say, circumspect of demand. In the medium to long term, we are optimistic.
Okay, all right. So you got to have time on your hands, time on your side to be able to wait really as things come through. Ankur, we'll leave it there. Thank you very much for your time here on CNBC-TV18. A good conversation as always. And, we'll have you back on with the next result season, which is never too far away. Well, let's get some trading ideas as well. Mitesh is with us with what he'd want you to do. An hour's worth of price action, not quite an hour, but a 120-point move on the Nifty is what we have. 23,386 on the Nifty. So it's pretty solid out there once again. Mitesh, what would you do?
Prashant, I think the index is, just at the verge of that breakout level of 23,380, 390 zones. I'm just watching that closely. But that apart, I think on the stock side, Shree Cement could be a good buy with a stop below 26,800 for targets around 28,000. In fact, the entire cement pack is something which I like a lot. And Shree Cement is showing good traction as well. And that apart, I think, Z Entertainment, I think Sun and Z both are doing well. Sun has slightly run up, so the entry point is slightly better in Z. Z can be a trading bet with a stop just below levels of 164.5 for targets of 177.
Right, a couple of these infra names doing extremely well. We have Honeywell, which is up 3%. Industrials, so to say. ABB is up around 3%. Decent traction is what we're seeing on Siemens as well and Cummins. So these four, names really stand out in terms of gains currently at the high point of trade for Honeywell, Siemens, ABB, as well as Cummins. Any of those you like?
Honeywell is something, which I'm extremely bullish upon. I think if I have to take a 12 to 15 month kind of view, don't be surprised if the stock goes double from here. So very bullish, very positive over there. It's more of an investment bet, but on the long-term charts, looking fantastic. So I think that's the only stock which I recommend because ABB and Siemens have already run up and I think, some cool-off is needed on the short to medium-term charts, but this is just starting to break into that big movement on the upside. So Honeywell is something which I'll focus upon. If somebody wants to buy, keep a slightly deep stop at about 52,000. I think a target of 85,000 is the minimum, but I suspect we are looking at a 1 lakh kind of.
Mitesh, Sun TV, any thoughts? I mean, it's back at August 2018 kind of levels.
So Prashant, I just mentioned Sun TV. I think Z and Sun TV are both looking from a trading point of view. Sun TV, I think, getting past the 750 was a good event. Yesterday, we saw 750 being crossed on a closing basis. And now we have some option build up at about 800 strike. 10.9 lakhs call open interest is what it's showing. But my belief is that I think looking at the medium-term charts, this is a 900 rupee kind of a stock, but it will take its own sweet time. I would want to enter it on dips to about levels of 760 or so.
So much happening in the broader market. Mitesh, thanks for that. Look at Praj Industries. These were not in the mix in the morning when we started. 5.5% higher on Praj, if you can have that up. SCI was there, but Moil, manganese ore, that's up 5%. Stocks at about 534. Tanla Solutions is a big mover, 7%. It's the third largest volume traded name on the NSE. And HCC would started slow, 3% after yesterday's big move. It's up another 7% today. So it's crossed the, it's crossed half a century, 50 rupees on HCC at this stage. There is Elecon Engineering, Gravita India, just some of the newer names which I didn't see earlier on. ITDC is up about 7.5%. Camlin Fine, Nesco is up 7%. And more. Gensol is up 5%. I think that's a daily circuit limit, 1,017 on Gensol. But Mangalam.
Well, Camlin Fine. Yeah. That's the other stock which is on our radar as well. And Sonal's waiting by it as well.
Well, yes, Camlin Fine Sciences, that is in focus because the wholly owned subsidiary of the company, they have gone ahead and entered into a share purchase agreement. This is to acquire 100% stake in Vitafor Invest NV, which is in Belgium, and its underlying subsidiaries and associates as well. So there'll be the 100% stake that this subsidiary will be buying out. Vitafor manufactures and trades in products which cater to the animal feed industry. Now, the details are as follows. In the calendar year 2023, the company made revenues of 16.5 million euros. But it is a loss-making company. So there was a loss of around 1.1 million euros, and the net worth of the company is around 6.78 million euros. The revenues, after being at around that 26 to 27 million euros in 2021 and 2022, they've come down to levels of around 16.5 million euros, as I mentioned earlier. Now, the consolidated debt is very high for this particular group that they have acquired. It's around 6.5 million euros. And this is the reason why the cost of acquisition here is only €1 because they'll be taking over the debt and the net worth to debt ratio is much higher, and this is the reason why the cost of acquisition is just €1. The company says the reason for their acquisition is that the group will use the facility of this company to augment and grow in the European feed and pet food market and also in the African market, and the product basket of Vitafor will be aligned with the company's group and marketing of the basket of their products which are already existing. Now remember, Camlin Fine Sciences is into shelf life solutions, aroma ingredients, health and wellness specialty chemicals, and also one of their segment is antioxidants for food, pet food and animal nutrition industry. So that is where they are trying to expand, and they see that this will be the big lever for growth for them as well.
All right, that's about Camlin Fine. Stock doing well, up around 5%, but a lot of stocks moving well and extremely well off lows as well. We had Container Corp. We've been talking about a lot of the other PSUs. Container Corp has now moved to the high point of trade. Tata Chem, I think this was one of the buys by Sudarshan, opened lower, opened in the red and has recovered from there, has moved to the high point of trade. And TVS Supply, that continues to do well. So let's revisit TVS Supply first up itself. It's announced a new 5-year contract with Daimler Truck Southeast Asia PTE Limited. The deal value is actually undisclosed. The company had earlier told us that they are targeting double-digit growth in the integrated supply chain solutions business in FY25. So obviously, this deal aids them meet their target itself, and then they are looking at 10 to 12% of revenues coming in from new business as well. What does all of this mean for their margins and eventually the EPS? Well, it looks like there could be sequential improvement in the margin as well. So actually, the management stock is materializing, at least for now, with one of the deals coming by, and that's what the street appreciates. Stock up around 6%. But that's about the equity markets. Let's shift focus to the commodity space. Manisha, what's the commodity you're tracking today?
Well, I'm looking at the rubber prices, Mangalam, because we're looking at a 3-year highs in the international markets for this one, and for the Indian prices as well. 200 rupees a kg has been breached, and this has happened after many, many years. Well, if you look at the rubber as a market, it has been in deficit for many years now. And in the international markets, major producing countries are looking at a lower production this time around. So there are weather concerns coming in from Thailand, from Malaysia, and from Indonesia as well. China as well, we're looking at Yunnan and Henan. They have been hit by weather, one area by drought and the other by heavy rain. So we are looking at lower tapping numbers from here. For Indian markets as well, this is off season because it's started to rain in southern India. Remember, 74% of rubber is produced in Kerala, and because of monsoons there, the tapping there also is not happening. Within Malaysia as well, the natural rubber production in April saw a decline by nearly 20%. So everywhere that you see, we are looking at lower rubber production in the markets there. When you look at demand on the other side, well, that has been on the stronger side from tire and auto sectors. There are reports that major corporates actually are buying rubber 3 to 4 months in advance as well. So there is this immediate tightness that we have seen happen in the physical markets. As I said, the global markets are looking at deficit since 2021. And when you look at the year 2024 as well, the production numbers are lower than the consumption numbers, and that would continue to add the premium to prices, as you can see. Also, when you look at the Indian markets, we have been in deficit for various years now, many years that is. We produce around 8 to 9 million tons, while the consumption is way higher. So we tend to import anywhere between 5 to 6 lakh tons on a yearly basis. Take a look look at the prices as well, it hasn't been a very profitable crop, by the way, to the farmers there. And we've seen prices at 117 in 2020. And in last 3 or 4 years, it has been between 150 to 160. This year, we're looking at an average of 175 a kg. If I give you a monthly breakup as well, it really has been in the last couple of months that we've seen the rubber prices continue to gain up. So currently trading at 200 rupees a kg for the RSS4 variety there. And the markets do anticipate that from here on as well, you could be looking at higher prices because one, this is off season, two, the demand from the tire sector and non-tire sector in sense of rubber also is higher.
Manisha, thanks very much for that. That's a commodity space as things stand right now. Well, 150 points on the Nifty, which means that it's a new record high. And we've taken out the high from the last few days, which is 23,412 on the Nifty. And it's back there at records, making new records. Doing
the Nifty Bank, which is doing extremely well, up 450 points now, upwards of 50,000 as well. The Nifty Bank is still, I think, a little less than
the high was
away
51,
from record high, on the Nifty Bank, but it's the one which has led the up move. In fact, when we opened for the market, the Nifty Bank was on a bit of a back foot, was a relative underperformer, but has come back. And how HDFC Bank is actually the big contributor out there. HDFC Bank has moved to the high point of trade, gain of almost 1% right now, recovery from the lows, and that's actually led the Nifty Bank higher, and alongside that, the Nifty itself. So a fresh record high. The question is, where from here?
Well, that's right. And both the pillars of the market actually are doing well because the Nifty Bank is up close to around 0.8%. You have the Nifty IT index that's up close to around 0.7%. So both the pillars of the market doing well, and that's what's helped us to move higher. What's not participating today is some of these FMCG-related names. That just a week or so ago, they were having a super performance. They've come in for some profit taking. You have FMCG index that's a little bit under pressure. But the big story right now is we have made yet another fresh all-time highs backed by the two pillars, banks as well as
what Rhythm said this morning, it kind of, he put the numbers to it. He said every day, visualize that, every day in the morning, mutual fund managers have to invest $100 to $150 million each and every day. So if they don't do it, it sort of piles into $1 billion in a few days, right?
Yeah.
I mean, so that's essentially the challenge, which a lot of, and the local money, quantum of local money in terms of not discretionary, but SIPs, it is only snowballing into a bigger and bigger amount. As they say, gains beget gains. And we've not had, it's like a positive feedback loop, which is getting bigger and faster. And I think that explains a large part of these
is that there is
gains.
A fair amount of supply coming in from the FIIs and also a lot of the promoters and other PE funds as well.
And
who
IPOs,
are giving
yesterday,
you
for
all
example,
of that.
the Ola Electric IPO got its approval.
Yeah.
I think we'll see Swiggy fairly fast now. And many other large ones perhaps also waiting on the sidelines, which should use this opportunity, very buoyant markets, to get the valuation that they want, but which also means more paper in the market. We'll take a break. We're back with Arvind Sanger. He's with us here in our studios. He's, of course, with Geosphere Capital Management. That conversation up in just a bit. Okay, well, new record highs, and I think it's a nice moment to get in Arvind Sanger, managing partner at Geosphere Capital. He's with us here in our Mumbai studios, all the way from New York. Thanks very much, Arvind. It's good to see you in person. We always have these early morning chats over the line, but great to have you here. Arvind, I mean, record highs, and it's almost as if nothing happened. Last week and last Tuesday specifically, it did not happen, but it did happen. So there was a bit of a mini heart attack, and then the market moved on. And the momentum is very, very strong. What do you make of it? And your prognosis for the near to medium term?
Well, look, the best news from the market standpoint is continuity. And if I may be, delve into the political arena, which is not my specialty, it looks like the government is going to be more focused on the economic side, and they may have less ability to do some of the social agenda. So that means economics becomes even more important as a kind of a focus for the Prime Minister and the coalition. And I think, I know everybody talks about the big four from a cabinet standpoint. I would say the big three from an investor standpoint would be the finance minister, which really is finance minister plus the PMO. And then you have the commerce minister, and then you have the roads and surface transport. And I think infrastructure is important, fiscal discipline is important, and the Make in India, PLI, all of that is going on, that is important. But there are many other elements of the story. I think one of the missing pieces of the story is when do the private sector capex show up? I mean, we've been all talking about waiting for Godot, it feels like, in terms of private sector capex, but hopefully that is also going to show up. But I think so, the market's valuations are not cheap. That is the challenge.
Arvind, before we talk about markets, you were at the India-Pakistan game as well. How was it? Scintillating as ever. And I am hoping that you're here briefly in India and you're going to be back, in New York, and India will lift the World Cup. So I hope you get to witness that.
Well, it won't be unfortunately, the next matches after this round, the Super 8s are not in New York.
Oh.
But it's a short flight away. You can definitely
I'm going to Barbados for the Super 8s. I may be going, and then, or whatever it's called, the next round.
Right.
And then we'll see. But the Caribbean and, and so I'm excited. We got to watch the stadium in New York, 34,000 people, which is a temporary stadium.
Yep.
Is larger than the stadium in Barbados, I think, where the finals are going to be, which is 28,000. So they did a fantastic job.
Made in just 3 months.
Yeah, it was a fantastic field. And actually, what I liked about it, I'm not a big T20 fan when it becomes 6s and 4s all over. This is where the bowlers were involved. So it was a much more interesting match.
Interesting game.
That's so much more interesting than the NTPCs and the other things that we speak about, right? But
that's right.
That is something that we have to speak about anyway, because you said the focus on the economy-facing sectors will continue more than consumer welfare schemes, etc. Would you still back the infra themes? And if yes, what are the names that you like there?
Well, we've played the infra theme more from the people like the steel and the cement and other construction-related companies. I think that the infra theme, there are other angles to it which we're looking at. Do we look at specific niches in the infra theme? There are companies coming public now which are in the renewable kind of infra build-out, because there's going to be a big build-out in not just solar and wind, but hydrogen, all of the other stuff. So in terms of infra, that is interesting. The whole green economy, which I think over the next 5 years could be interesting, although there's a lot of froth in some of the valuations, there are opportunities in some of the some of that. So I think there are themes that we're looking at that are medium to long-term good, but the challenge in India is finding value at a reasonable price.
What about real estate? The cement player as well comes into this real estate, and some believe maybe we're still starting off in that 10-year cycle that we've seen. How do you approach real estate names here in India? Some of them have done well, but yet some of them, case in point being a DLF, they're still not at the peak that we saw more than 10, 15 years ago.
I think we own a couple of real estate stocks. There's obviously the REITs that are there, which again, if the interest rate cycle is going to turn favorable, and the office occupancy took a dip and now has started to recover. That's one aspect to it, but the residential real estate cycle, I think, has a lot of room to run. And so the question is, do we go to NCR versus Bangalore versus Mumbai? And right now our exposure is to Mumbai, but I'm going to Bangalore, and I think that could be an interesting play. Delhi DLF we have owned in the past, we don't right now, but I think this is a national real estate cycle which I think has a lot of room to run. But I think the more interesting thing to us is trying to find, yes, real estate will play, but the whole financialization, real estate going to be as boom? When you had the last boom, real estate was the thing where a lot of savings went. So there's a financialization of the economy which creates other sectors. But yeah, real estate will be.
So Mumbai would be what? Oberoi, Godrej?
Oberoi, Godrej, Lodha, these are all plays on Mumbai.
Yeah.
Arvind, power is a space. Do you have any thoughts? I mean, we're seeing power cuts in NCR. I mean, of course, here in Mumbai, things have cooled down a little bit. But I mean, over the last many weeks outside of Mumbai, you're getting reports of Pune, for example, was facing power cuts. And the one big source of power demand is going to be cooling. And that, I mean, if trends and forecasts are to be believed, it's going to get hotter and hotter. I mean, power as a theme. And where do you look for ideas here?
Okay, so there are 2 or 3 ways to play it. One is, like you said, cooling. So air conditioning companies are interesting as a play. But in terms of the power sector, I think there are many ways to play it. Do we play it coal companies in India? Do I play it coal companies globally? India is going to need coal-fired thermal power. Unfortunately, yes, we like the solar and the wind stories, and we are looking at that area in terms of infrastructure build-out. But in terms of the biggest challenge, no matter what we talk about, climate change, is India is going to have more thermal power. Because at 7 o'clock in the evening, the power prices go through the roof because of the shortage of investment in thermal power. So, whether it is the coal companies like a Coal India, or it is NTPC or NHPC, which has had delays on its projects on the hydro side, there are those ones. There are the private sector ones. But I think power is a theme. India is going to have double-digit steel demand growth, close to double-digit cement demand growth, and close to double-digit power growth for the foreseeable future if this economy is going to continue to grow.
Speak about some new sectors emerging as investable opportunities. Is there anything new that you've put your money in right now?
Well, I wouldn't. I hope to come up with some new ideas on this trip. It's just I've just sat down 1 day of meetings, but my assumption is that.
Okay, let's put it this way: who are you meeting? So we get a sense.
Well, I met yesterday with the companies and a couple of companies in the solar space. I'm meeting companies in technology, in domestic healthcare, domestic-facing healthcare companies, and so the goal is to meet companies that will benefit from. I think healthcare as a theme, post-COVID, we had a little boom and we've had a little comeback. But I think domestic-facing healthcare rather than the conventional pharma companies is of great interest to us. There's disintermediation taking place in the fragmented distribution system, the fragmented retailing system. That's an area of interest to us. Technology companies that are doing innovative things that are India companies, not just an IT outsourcing story. These are some of the areas that we're looking at which could be interesting, which are not the conventional ways that people play the large cap liquid, Infosys, TCS type of names. So we're looking at more domestic economy rather than just the export facing economy.
Right, your phone was ringing. Maybe that's the next meeting. Thank you very much for joining us. Great conversation, and do visit us next time you're here. And in the meantime, we'll chat with you down that line. From New York. Thank you very much, and have an enjoyable visit. I think the market is holding nicely. We're up 140 points, and we're at 23,400 plus new highs in the first one and a half odd hours of trading. It's time for a quick commercial break here. On the other side, it's a special segment, is the economy. My colleague Lata will get chatting with Girish Kumar Kadam and K. Ravichandran of ICRA. And we also have Abhishek Tyagi of Moody's Ratings for an exclusive chat to decode the state of infrastructure investment. Stay tuned.
Welcome to It's the Economy. Even as the new government begins budget preparations, the widespread expectation is that capex and infra push will continue to remain a strong pillar of the budget and policy. Rating companies ICRA and Moody's have organized a timely seminar on the state of Indian infrastructure investments and how much investment is needed and possible in areas like renewables, roads, ports, airports, the words that we are likely to hear in the budget. Joining me to give us a summary of their arguments are Girish Kumar Kadam, Senior Vice President and Group Head Corporate Ratings at ICRA, Ravichandran, the EV and Chief Ratings Officer at ICRA, Abhishek Tyagi, VP and Senior Credit Officer, Projects and Infrastructure Finance at Moody's. Gentlemen, thank you very much indeed for your time. We have to cover a large ground very quickly. Mr. Ravichandran, first to you. First of all, has the private capex cycle picked up? Has it taken the baton from the government at all?
Yeah, thanks, Lata, for inviting us to your show. On the capex front, so far, as we're aware, Government of India has been driving the capex cycle through good amount of allocations on the roadside and railways and defense, which is crowding in private sector investments. If one looks at the order book position of some of the private sector companies, they are brimming with orders, so to the extent it's good. But moving ahead on the private sector, pure play capex, I believe this will pick up over the medium term, especially in sectors like oil and gas, the metals and mining, airlines and hotels and healthcare and so on and so forth. These are the areas where we are seeing capex. In addition to that, the PLI-driven investments would also be forthcoming in segments like electronics and semiconductors and textiles and solar modules and so on and so forth. Unlike the previous capex cycle, where it was dominated by investments in the thermal power and refining, etc., where they were really capital guzzlers. In the current cycle, we are seeing investments more on the green side, especially green hydrogen, green ammonia, EVs and battery charging, etc., where the nature of the capex is somewhat changing, which are not capital intensive, because of which you don't really feel the impact that private sector capex has been, happening on the ground. But with more such investments happening, which are back-ended, I believe, the cycle will pick up over the short to medium term, especially now with the political stability. The sector will see renewed momentum on the capex front in the medium term.
Can you give a number? When you say capex has picked up, is there some number, say, vis-a-vis pre the COVID?
Yeah, this obviously one thing that we look at is with regard to the capacity utilization at the aggregate level. So that has been hovering around 74-75% level. So still there are many sectors where they are operating at well below their capacity. So demand is something we are slightly concerned, and on that front, perhaps consumption is something needs to be given a renewed momentum. That some incentives perhaps would be required from the budget level. That could make a big difference. Otherwise, today most industries are operating at good capacity.
I get it. Okay, since you spoke about renewable at such length, let me get Abhishek into the conversation. Abhishek, since you're from a rating angle, the problem with power, including renewable, could be the state of the discoms, the inability to pay. At the moment, are you confident of going into renewable sector without this overhang of credit quality?
Thanks, Lata. See, the overhang of state distribution companies have existed for last 15 years in this sector. Okay, but over the last couple of years, perhaps things have changed for the better. There have been improvement in the payment for the IPP selling power to the discoms. We have had this in the past as well. There were some false starts in the past which did not last. But so far, over the last 2 years, I think we have seen that the receivable cycles for the companies which we rate, has been shortening. The payments are more timely. Having said that, for this to be sustainable, the tariffs eventually for the distribution companies have to be reflective of their costs. The subsidies from the government should be timely for the distribution companies, and they have been timely over the last 2 years, actually. But that needs to continue, and the key thing, for this to sustain would be the tariffs, that should continue to be a reflection of the cost of the distribution companies.
Okay, I'll come back to you on which aspect, which part of the power segment you're most bullish on. But let me get Girish as well into the conversation. Girish, the government has been seen to be doing, as Ravichandran also said, doing a lot on infra. What are you expecting in FY25 itself in terms of a confirmation of where money will be spent, roads, ports, etc.? Which will be the flag bearers?
Yeah, thanks, Lata. So in terms of non-power infra push, certainly, we expect, the policy focus to continue to drive very strong investments in the road sector. In fact, the budgetary allocation towards road sector by the ministry has gone up by more than 8 times over the last 10 years to touch about 2.7 lakh crore this year. And with that background, we expect the road execution to move up by around 8% to touch about 13,000 kilometers this year, thanks to very healthy project pipeline, which is there for the sector, almost 45,000 kilometer project pipeline. And the fact that there will be a greater focus from the ministry to ensure faster project execution. So that's on the road side. Even on the port side, thanks to policy focus through Maritime India Vision Document 2030, there is a large investment potential. Almost 800 projects worth of 5.5 lakh crore have been identified. In fact, the progress has been a bit slower. About 20-25% of these investment quantum has already been spent, but the potential is quite significant with respect to capacity expansion in ports, port connectivity related projects, and also port modernization related projects. So that's on the port side. There are emerging infra sectors like data centers, where we see that there is a very solid investment pipeline, almost 1.5 to 1.6 lakh crore over the next 4 to 5 years. Thanks to the explosion in the data consumption that we are seeing, rapid digitalization, lots of favorable policy measures towards the data center as an infra. And also at the state level, there are lots of concessions and the policy measures which are getting adopted, and which is why even the data center investment story is looking quite robust. More than that, even on the airport infra side, committed capex is also fairly large, although it is not to that extent what we see in the roads and power, but still about 55 to 60,000 crore of capex, which is committed even on the airport infra side, particularly towards greenfield airports in few cities, brownfield expansions of the airport terminals under Airport Authority of India, and so on. So overall, within the non-power infra side, the investment potential is fairly significant, thanks to policy focus, which is being continued.
Okay. You don't think that road construction can slow a bit? After all, we are losing some time in terms of the earlier part of the year, election uncertainty, and then new government yet to take on. You still think that there will be a 5 to 8% jump in road execution kilometers achieved?
Yeah, so we saw a very significant jump in the road execution, particularly last year, almost 20% jump. Thanks to FY24 also being a pre-election environment year, we saw a great jump, which was also seen in a pre-election environment sometime in 2019, 18, 19 as well. But given the fact that the project pipeline is so healthy, Lada, almost 45,000 odd kilometer, and there will be a greater focus towards the completion of the pending projects, which is why we are expecting 5 to 8% jump in the pace of the road execution even this fiscal. In fact, historically, if you see, the pace of road execution has certainly improved. I mean, 10 years back, the pace of the road execution used to be in the range of 10 to 11 kilometers of road execution per day, right, which has already touched to about 33, 34 kilometers per day, although it is still less than the policy target, but a lot of progress and has already been done in terms of improving the pace of the road execution.
Okay, I think that table will run. Your bar chart was available. Yes, there's clearly been an increase in execution. Abhishek, which part of power do you think will see the maximum investments? We also need grid, transmission, distribution, cells, grid cells. Where do you see maximum money going?
Yeah, sure. I think the largest part of the pie for power investments will be still renewable generation capacity. We are expecting about close to $190 to $200 billion need to be spent over the next 7